For international capital, it's important to know what the latest Chinese policy moves are in order for companies to plan their investments and for fund managers to choose what deals to make. Currently, the Chinese Communist Party, or CCP, isn't inspiring confidence in the outside world. In the 3 years since the epidemic broke out, geopolitical factors have also become a consideration for European countries' trade with China. Production and supply chains were disrupted during the lockdown across China, forcing multinational companies to look for alternative solutions. Chinese foreign trade companies were thus shut down by the Beijing authorities for 3 years, and by the time the doors were opened again, the world had changed dramatically. Chinese media China Business Network reported that many Chinese foreign trade enterprises could only rely on emails to keep in touch with existing customers and get limited orders for 3 years. When some business owners overcame all difficulties to go to sea to grab orders, they again see the market has changed dramatically. Foreign trade enterprises admit that in the past 3 years, enterprises can no longer get new customers, and businesses all rely on old customer orders to survive. Especially in 2021, the price of international sea freight continued to rise, and many customers, out of consideration for logistics costs, switched orders. These foreign trade companies are now saying the trend of moving orders to Southeast Asia is irreversible. That is, after the 3-year epidemic, many multinational enterprises have partially transferred their industrial chains out of China and have started placing orders in Vietnam, Indonesia, Thailand, and other countries. Shanghai Port, located at the intersection of the east-west transportation corridor of the Yangtze River and the north-south transportation corridor of the sea, is the main hub port along the coast of China and has topped the list of global seaport throughput with 36.53 million TEUs in recent years. However, in mid-June, an anonymous international shipper in Shanghai revealed to Radio Free Asia that due to the deteriorating business environment leading to industrial shifts, the port of Zhanghuabang, an important domestic and foreign trade port in Shanghai, has recently experienced a few days without a single ship. This is the first time in more than 30 years in the business, and the business has dropped by at least 1/4. He said, "This used to be a major terminal in Shanghai. It can accommodate 3 big ships and 4 smaller ships. A few days ago there was no cargo. Our business has experienced a significant drop. I estimate at least a 20 or 30% drop. What's the reason? The supply chain has moved and the direction of logistics has changed. Many domestic companies have moved to Southeast Asia for production. Many factories there are owned by the Chinese. The recent situation is even worse than in 2016 and 2017. At that time, for example, from Shanghai to Southeast Asia, a ton of goods, excluding loading and unloading, cost 10 USD. Now much of the time it costs only 8 USD per ton. But then the oil price was only US 200 a ton, and now the oil price is more than US 600 a ton. According to the Shanghai Shipping Exchange data, the Shanghai Export Containerized Freight Index, or SCFI, peaked at US $5,109.60 on January 7, 2022. After that, there has been a rapid decline for 14 consecutive months to a low of US $906.55 on March 10, 2023, a drop of 82%. There were then minor fluctuations with the figure at US $934.31 on June 16th, down nearly 5 percentage points from a week earlier as well. However, the Chinese government presents a different picture. From the perspective of people's daily consumption in e-commerce, we can see that the volume of postal packages has reached 350 million pieces per day, indicating a relatively rapid growth of online retail sales of physical goods. We are unable to obtain the latest video on the situation at the Shanghai terminal. Let's take a look at the previously aired scenes from China's major ports in March 2023, and then look at the latest data on China's foreign trade to analyze whether the situation is getting worse or better. Let's take a look at a recent visit by a member of the public to a port in Shenzhen. Here is the Yantian port, empty containers everywhere. The export is really screwed this year. I'm going to tour the site today. This is the place where empty containers are stored, right? all the containers stored here are empty, right? Yeah, you can't afford to defy the US. Indeed, you can't do anything about the US. Yes, yes. If they don't place orders, there is nothing we can do. We have to rely on them to make money. Yes, yes. So this year's situation is far worse than last year's. It's gonna be like this in the future too. It won't do well in the future? Even in the future, it will be affected? In the future, the Chinese economy will have to rely on the domestic cycle. In Shenzhen, not only the Yantian port is full of empty containers, but all other ports are in a similar state. These ports are parked full of empty trucks. Chinese media reported that vacant containers were stacked up to 6 or 7 stories high at various terminals in the Weigaoqiao area of Shanghai port. Workers at the Shanghai terminals said that up to 8 floors were stacked, and a large number of empty containers were also seen in the Yangshan deepwater port area. Ningbo, a major port in China, has 4 or more levels of containers stacked, all empty. Now it's full of empty trucks, turning it into a parking lot. According to data released by the General Administration of Customs of China on June 7, 2023, both imports and exports declined, and foreign trade contracted more than expected. The data shows that imports and exports in May this year amounted to $510.19 billion, down 6.2%. Among them, there were exports of $283.5 billion, down 7.5%. Imports of $217.69 billion, down 4.5%. Trade surplus of $65.81 billion, shrinking 16.1%. According to a press release issued by China's General Administration of Customs, imports and exports to the EU grew, while those to the US and Japan declined. The poor performance of exports reflects a decrease in global demand for Chinese goods. Imports also performed poorly as China imports parts and materials from other countries to assemble finished products for export. And by country, foreign trade exports in May cooled more for manufacturing countries than for consumer countries. In dollar terms, exporting to manufacturing countries like ASEAN fell 15.9% in May from a year earlier, the first decline since May 2020. In the first 5 months of this year, China's exports to consumer countries like the US fell 8.5%. Industrial activity in China fell faster than expected in May due to weak demand, according to the official Manufacturing Purchasing Managers Index (PMI) released by China's National Bureau of Statistics on May 31st. The PMI subindex indicated a shift from expansion to contraction in factory output, while the new orders index, which includes new exports, fell for the second consecutive month. China's economic data has a history of being watered down, especially the recent data from China Customs. This can be seen by comparing data provided by different departments in China from January to April. Before the May custom figures were released, the CCP claimed to the public that foreign trade was doing well. This is because, according to customs data, the surplus in goods trade rose 38.2% year-on-year from January to April this year, up US $81.3 billion. This figure gave many Chinese people the false impression that China's foreign trade exports were recovering. However, there's a mainland Chinese who loves to study data, and his online name is Lao Man. He collected the monthly data issued by the China Foreign Exchange Bureau and posted them on Weibo, China's largest social media platform. The result of his calculation is, the trade surplus from January to April was only US $159.2 billion, which is US $135 billion less than the surplus of US $294.2 billion reported by the customs. What is the difference between these two sets of statistics? Customs statistics are based on the data declared by foreign trade enterprises, while Foreign Exchange Bureau statistics refer to the data of foreign trade enterprises that have settled and remitted foreign exchange. This Weibo blogger also found that from 2021 to date, the Foreign Exchange Administration data is substantially lower than the customs data, and the discrepancy rate is getting higher and higher, reaching an alarming 45.9% from January to April 2023. This trend of data change shows that funds are flowing out sharply, and although officials say the foreign trade situation is good, cash is not being received in hand. That is, according to the data of the Foreign Exchange Administration, the actual surplus in 2023 is US $159.2 billion, and the actual surplus inflow in 2022 was US $187.2 billion. Rather than an increase, 2023 showed a decrease of US $28 billion, or 15% drop compared to 2022. This is an important figure because the magnitude of its decline corroborates with data from National Bureau of Statistics, another communist government department that counts exports, which shows an 11.4% contraction in exports, in line with the cries of foreign trade counterparts across the board. The National Bureau of Statistics compiles data differently from the Chinese customs. It's based on data reported by exporters above a certain scale. It doesn't include small and micro enterprises like Chinese customs. But in theory, the ability of large enterprises to resist risks is better than small and micro enterprises. If above-scale enterprises aren't doing well, then small and micro enterprises would do even worse. By digging into the data from the Foreign Exchange Bureau and the National Bureau of Statistics, it can be speculated that China's exports have been declining from January to April of 2023. In other words, China's customs data are suspected of being falsified. The blogger named Lao Men also compiled statistics on the export tax rebates of Chinese foreign trade enterprises. He wrote, "The export tax refunds for the current month roughly reflect the true export situation of the previous month. There was a big drop in export tax refunds in April-May, which roughly reflects the real export situation in March and April. Therefore, he believes that this also indirectly confirms the suspicion of falsification of the data published by China Customs. We have checked the relevant data and confirmed that this blogger's calculation is correct. Since 2023, the top management of the CCP has demanded to stabilize foreign trade and expectations, so it's likely that the Customs Department and the Ministry of Propaganda are working together to falsify the data. But now that the economic recession is in a state that is difficult to cover up with data, the Chinese government is using obscure language to try to explain it to the public."
Looking at the industry-specific perspective, the chemical industry, electronics, and transportation equipment have emerged as the main areas of conflict for trade friction measures. Out of the 13 major industries that are being monitored, the chemical industry has the highest global trade friction index, followed by electronics, transportation equipment, machinery, agriculture, light industry, and pharmaceuticals, all of which are also in the high range. Among them, the global trade friction index of the U.S. remains persistently high, with its import and export restriction measures index being the highest among all countries in the same subcategory for the month. The technical trade measures index and other restrictive measures index are also in the high range.
Now we see that in May 2023, China's customs data showed a trade surplus of $65.81 billion, a contraction of 16.1%. The data released in April was an 8.5% increase, and a month later there was a significant drop, possibly because the difficult situation of China's foreign trade can no longer be covered up by the customs. The Voice of Germany reported the data with the headline, "Disappointed again." The slowdown in exports will exacerbate the downward pressure on China's economic growth this year. At the same time, this pressure will be even greater in the international environment, as developed economies may experience a mild recession due, among other things, to the effect of rising borrowing rates. Amid the overall trend of declining Chinese exports, one product has hit a new high since 2016: China's steel. What will this bring to the world? As China's real estate sector enters a months-long slump, the Chinese steel industry has taken a serious hit, causing steel prices to fall to a 3-year low in May 2023. Strong demand, mainly from Asia and Africa, has enabled Chinese steel mills to continue their operations. In Chinese customs data, we see that steel exports rose 41% year-on-year in the first 5 months of the year. The continued weakening of the Chinese yuan this year has also benefited exports. The yuan has weakened nearly 5% against the dollar since the beginning of 2023. 3 analysts told Reuters that China's steel exports in 2023 could far exceed last year's 67.32 million tons, and they expect them to reach 77 million tons. Chinese custom data showed that steel exports reached 8.36 million tons in May 2023, the highest since September 2016. However, Chinese steel exports became cheaper than usual, with the value of exports falling 27.5% year-on-year to just US $7.7 billion, or an average of US $922 per ton of steel. Reuters reported that traders said demand is strong in Southeast Asia, the Middle East, and Africa, but due to expensive energy in many countries, their steel production costs are higher than cheap Chinese steel. 2 metal traders said steel exports may fall in June, but may rise again in July and August, noting the recent increase in inquiries from Southeast Asia and South Korea. Thomas Guterres, an analyst at metals consulting firm Callanish Commodities, warned that large Chinese steel exports could hurt offshore manufacturers. He said, "The impact on export markets has been very bad. Overseas markets are already struggling, and many regions are importing more steel, forcing local production down." According to the World Steel Association, steel production in Asia and Oceania fell 6% year-on-year in May. To this end, India is considering the imposition of countervailing duties on steel from China. It also imposed anti-dumping duties on imports of stainless steel in 2022. Let's go back to the Yangtze River Delta and Pearl River Delta, which are the concentrated areas of foreign trade enterprises in China. With the shift of the industrial chain of foreign invested companies and their foundry enterprises, some small foreign trade enterprises have closed due to the lack of orders, while some are still struggling to hold on. As a result, there is a massive wave of unemployment in these 2 regions. Huizhou is a metropolitan city within the Pearl River Delta and a developed city. I am now in the vicinity of Watergate Bridge in Huizhou. I heard that now the real economy is too difficult to do and many stores are closed. I have now come to the vicinity of the Watergate Bridge to take a look at the shops here. Many of them are closed. Look, this one is closed. The one ahead is also closed. Does this one open at night? This one opens at night. There's a lot of traffic here. I'm going to look across the street. The restaurant businesses are all closed. This one is open for lease. This one isn't open. I walk in this direction and both aren't open, and this one isn't open either. Let's look at another prominent manufacturing city in Guangdong Province, Dongguan City. Hello everyone, this is Dongguan. I'm here to look for work, but the situation here isn't good. I must hurry to find a job, not wait till I run out of money. Let's look ahead. Here is a big industrial area with a lot of factories, but I don't see them recruiting workers. Then let's look at this side. I don't see any job advertisements. There are many advertisements for factories for lease on the wall. It means that many factories have gone belly up. What's going on? So many factories for lease. Let's look further ahead. There are more industrial areas ahead. There are also several advertisements on the wall for factories for lease. When summer comes, many students from trade schools flock to factories, trying to make some money during the summer. However, they encounter incredibly low wages that are difficult to execute. I repeat, 9 yuan or US $1.20 an hour. 9 yuan. If you want more than 9 yuan, you have to talk to the boss yourself. If you can't accept the rate, you take your luggage and get out of here. If you accept it, go into the factory and fill out the form. A man working as an employment agent in Guangdong Province played a recording of his communication with the factory owner. The factory is having a hard time. At first, we weren't going to use summer workers, but after a long negotiation, we agreed to use some summer workers. The price is also very low. About 300 people came today. According to the contract rate, it is US $2.20 an hour. In reality, it is 50 cents or 70 cents an hour, so I am okay with it as long as it doesn't give me any trouble. These agents surely know how to trick students. They can recruit a lot of students every day. These students only care about the hourly rate. They'll go wherever that offers a little more money. After listening to the recording, can you understand why many people feel that the wages of the summer jobs I've placed here are low? After all, the factory has been slashing prices and finally came down to US 50 cents and US 70 cents per hour. The $1.60 to $2 an hour I have posted here can be considered high. Today, we are now full. Basically, it's all students who come to do summer jobs. Those who are under 18 years old, who are 16 or 17 years old, are all paid $1.40 an hour today. Those who are 18 years old, there are 30 spots that pay US $2 an hour. Students, especially those who aren't 18 years old, shouldn't come out to work if they can. You assume that there are high-paying jobs in the outside world when you think about how much money you will make, but those are all lies. You also must think about whether you can eventually get the price of the contract. If you can't get it, what's the point of a contract that says $14 an hour? This is the summer of 2023 in China. The weather is hot, but the foreign trade industry seems to be frozen.